Hi guys, Ken Chigbo, aka KenFX Freak, and I'm back with another week roundup and look ahead to the key events. Now, let's start with the dollar, as we always do. Now, obviously the dollar's been on a nice run to the upside for the past few weeks, since the back end of May. Remember, we broke out this sort of flag structure, as you can see on the weekly, extension to the upside. Remember, this big monthly area down at the mid-89 region was well and truly protected. Now, why? As a quick refresher of our memories, of our nuggets, remember, a couple of weeks ago, huge upside momentum for the greenback on the back of the hawkish FOMC rate decision, the Central Bank of the United States, indicating, an end to this, this huge stimulus package. Interest rates start rising soon enough. So that's why we had that big rally to the upside. Now, let me just note one thing. On Friday, we had the non-farm payrolls, as I'm sure you guys would have seen. Decent amount of jobs added, plus 800,000 or so. But the negative thing was the unemployment rate. So it offset that good amount of jobs being added to the economy. But the unemployment rate rose up to 5.9% from 5.8%. So not good there. So obviously just a needed bit of a technical correction anyway after this nice run of consecutive daily gains there for the greenback. Remember, this is the dollar index that we're looking at here. So understandably, we're going to see a bit of a correction. Okay, keep an eye on this 92 region. I expect those dips to be bought because regardless of that data, the economy in the US is still heating up. People are out going shopping and spending. Jobs obviously is a little bit hit and miss, but it will start becoming more hit soon come as the economy sort of gets back, to pre-pandemic levels, well and truly. Right things are being done. What am I looking out for in the markets? Well, there is a little bit of uncertainty, I must stress. That's why we've seen the likes of, precious metal gold rising to the upside. Okay, you can see in comparison to some of if you look at some of the other dollar related that have been getting hit, whereas gold's been holding its ground, holding decent ground. And that, my friends, is simply down to a little bit of safe haven flow into the precious metal because of this, Delta variant, this new strain of COVID that's been hitting markets and countries and forcing lockdowns in likes of Australia, parts of the UK again, parts of Europe exploring that. Just weighing a little bit on market sentiment. I don't expect that to last long in terms of gold specifically. I expect that to be hit again on a stronger dollar. But just want to note a couple of observations, guys. In terms of specific trade ideas and technical analysis, actual trades that I'm taking, check out freakfxtrading.com. Check out our membership, our pro package or our light package, and you'll get obviously all trade analysis, and you can have access to our education as well, depending on the package that you choose. Now, on the on the monthly for GJ, I want to show two things on for Japanese yen because of how I say about those safe haven flows, and perhaps we could very well see that for Japanese yen. Okay, look, big top area here. I mentioned this before, 156 for GJ. Okay, this big monthly area at 156. We pointed this out and took advantage of a big drop here actually in our private community. Keep an eye on this wick needing to be filled for the month of June, likely to be seen. You can see several rejections I'm going to the 4 hour now. This zone protecting 154 around this mid 53 region, and that could very well drop like a ton of bricks down into our next zone, even just being conservative, say around 152. Look on the hourly, breaking out of a flag structure, as you can see here, look, expected to see an extension to the downside. Similar things really with euro yen on the monthly. If you have a look here, again, wick needing to be filled. Here you see for June, probably going to go and fill that down to 130. That's a nice 150 pip potential drop there. You can see on the 4 hour, actually on the 1 hour, if you drop down to the hourly, you see some narrowing out of this flag structure. Got a bit of a potential sort of double top there. Thereabouts, not the cleanest, but like an M structure, right? And our neckline support down at 131. If that gets breached, then we're going to go and fill that wick of June, as I say, towards sort of the 30 region. Another, just a little observation, something for you to keep an eye on, just a little one to keep an eye on anyway. Dollar CAD, right? Dollar CAD's been obviously on a massive descent since March, right? We've got all of this downside, and now you see how in June we June we sort of setting up to break out of this channel structure. Now this is the retest here in July. You can look nice and clearly on the weekly actually how we're sort of retesting that upper part of that channel structure. Daily price action just been narrowing within a pennant. Look, narrowing. So keep an eye. This could be a nice buying area from around sort of 23 to sort of 22.50 for us to extend and continue that push to the upside. Other than that, we took advantage last week, actually, a nice breakout of a flag structure for Euro, the US 30. Nice little breakout from this flag, extension to the upside, really easy one. Keep an eye on a potential pullback into sort of the mid 34,000 region, 34,500, and those dips to be bought to go and challenge the all-time highs up at 35K. You can see here on a monthly, you know, things are just looking bullish. We want to go and fill these wicks to the upside, and I expect that to be the case as markets still for now enjoying obviously all this free money, all this cheap money from banks, and of course low interest rates still for now. Obviously I know we're moving towards potentially the end of that area, but the stock's still loving that at the moment, and the economy growing and expanding. Guys, in terms of specific trade ideas and timely fundamentals, all of that, freakfxtrading.com. Check out our membership there. And with BluFX, an amazing solution if you are looking to become a funded trader. You do want somewhere you can trust, someone that's going to allow you to grow, give you that more capital once you prove yourself, and which you will develop and be nurtured as a full-time trader with the solution of BluFX, because the risk protocols there are excellent in helping polish you and become all-round. And if you do want longevity in this game, do not hesitate to check out BluFX. That's me. Enough for me, Ken FX Freak. Stay lit. Let's get it.